Hey everybody, how's it going? Thanks for joining me here for another trade review. February 25th. I took I think 6 trades today on only 2 different stocks. I took trades on Tesla and STMP stamps.com. Um, we'll get started here by looking at the overall market. As I've said in previous episodes, um, we're coming up here to these previous high areas of around the 280s to 281. And as you can see here today, we actually broke up above the previous highs. We went all the way to 280, 30, 281.31. And so that's about 70 cents over the highs of these consolidation areas on the daily. The high here's 281.22. So reaching over that high just by about 9 or 10 cents, and then we rejected back down off. So if we look in the 4 hour, or if we, let me go to the 1 minute actually. If we look on the 1 minute, we can see this is the pre-market. This is where I was watching in the early morning hours. We can see we broke through this purple line resistance level, and we jumped and we started pushing up pre-market. When I saw this, I knew that I wanted to look for mostly long plays on the day, thinking that stocks would follow this the lead of the market, and we would get an increase in prices at least on the day. So looking at that, with that in mind, we'll get right into the trades that I had. So I was keeping an eye on Netflix and Tesla pre-market, but in about 5 minutes in, somebody mentioned that STMP was pushing up, and I had traded this stock back on Friday, so I was decently comfortable with the levels. And this is where I took my first trade. So, um, sorry, let me show my trades here. So here we are. We pushed up through this white line, which I have marked off back here as uh, just a level that I have from the previous day, and we push this stock is down huge. If we look at the 180 day and see this massive drop here, and the stock has just gone down over 50%, and we had 2 days going down, and we knew that a bounce was eventually going to come. I was looking at the earnings and a little bit of the fundamentals, and they were trading down here in the 80s. They were trading at only like 5 or 6 times um, a PE ratio. So I figured that was a would be considered a pretty good value buy, and that people would be buying it all. So that's exactly what's been happening. So my first trade was here. I went long at 2. I waited. I saw this pushing up, and as soon as I saw this big red candle down, and we can see on these volume bars, and this is a new indicator that I downloaded, guys, and it's really cool. It gives us the volume profile. So now we can see what percentage is buying and selling in each volume bar, and we weren't able to do that before. If you want more information on that, just send a comment, and I'll let you know how to download this software or this codes that you can get these volume bars. I'm not going to. It's really quite amazing, and it tells us a whole lot of things that it can be useful in regards to volume that I wasn't able to decipher before. So it's a great tool. Anyhow, get back into the trade. Went long here, 200 shares at 86.47, and my stop loss was at 85.50. And this was a mistake. So I had $1 stop loss because 85.50 is, sorry, let me just mark off 85.50 for you guys. Right about where this yellow line is, that's 85.50. And really, my stop loss should have been down here under the previous consolidation area where these two candles have made a base. This is where you want your stop loss down below this level, but that was just too far. I set my stop loss after I bought here 86.40. Right. So I bought here at 86.40. Sorry guys. Bought here 86.40, and I set my stop loss after the fact, and I set it up tight here because I just simply could not risk down to here. And actually, this is a mistake because on 200 shares, I was risking about $200 on this trade, and I only want to be risking $30 to $75 on a trade. So I saw this opportunity on this big red candle, and I was fairly confident it would push higher. So I got and took my opportunity very quickly, and as a result, I didn't have much time to think or set a proper stop loss. If I keep this up, it's really going to be detrimental to my trading, and I want to kind of be more disciplined and be more focused and set better stop loss and get better entries. My entry was good. I just needed to go smaller share size with a larger stop loss. Anyhow, so bought there at 86.47, and because I was so heavy share size, I knew that I wanted to sell out and cut and lock in profits as soon as I got a push up. So up here, I sold 100 shares at 87.12. So that's not even a one. That's not even a one-to-one risk reward. So because I was risking $1 to gain about 60 or 70 cents. So, but I was in too big a share size, so that's why I sold out there early. And it's a good thing I did because we pulled back and got a drop down here, and I sold out 86.48, the remaining 100 shares just above my entry of 86.47. So I was all out on that and I made $66 profit on that trade. All right. So after I took that first trade in here, I sold out here on this drop because really probably shouldn't have, but I was getting nervous with my share size, and I didn't want to give anything back, and we were coming back down to my entry price, so I wanted to lock in profits, and that's what I did. After that, I jumped over to Tesla. Tesla has been pushing up the past couple days, and it was selling off. It's been selling off the past few days, and it was popping up pre-market, and it looked like the price action was showing that it wanted to continue up here to. And if you guys know about Tesla, the $300 mark is a pretty key level. So I was thinking that we would go long and get above 300. That was my my thought process on trading this. If you can see, we put in a higher low compared to back here. So that was my thought process without getting too detailed about that because of time. So what I saw this pushing up, and then I saw a consolidation area kind of holding these levels here at 299. Now in hindsight, $300 is a resistance level, and I'm going long at 299. Maybe not the best entry, but I did nonetheless because the price action looks strong. I added 100 shares here at 299.92, and I believe my stop loss was I don't even have a stop loss written down, but my stop loss should have been below this low of this candle here, at the wick of this candle right here. So that's 298.77. So a little over $1 stop, about $1.10 stop loss there. So on 100 shares, I'm risking $110. Another bad trade with bad risk. I'm risking too much here for my account size. I only want to be risking 2% at the most, which would be about $70. So that being said, I need to try to do a better job in that regard. So with my share size now, but these things are happening so quick, and I'm trying to enter on these big drops here, so I didn't have much time to look at it. Once this big candle came down, I basically just bought because I didn't want to miss my opportunity. Um, that being said, I need to take my time, and you can see I stopped out here on this candle down, um, because the market was actually starting to curl over. I just had a bad feeling. I just thought that maybe this trade was going to go against me, so I stopped out here for a $30 loss. It lost 30 cents on this trade. So I realized that my stop loss was risking too much, so I stopped out early here. Um, if I had had proper stop loss and bought on the bottom of this candle where it was putting in kind of this base here, more of a base, and I bought right here, that I would have been able to hold through here and came out with a nice gain for a few $100s, but I didn't do that. So I stopped out there. I lost $29 on that trade. So that brought us to about up $30 on the day. After that, I went back to STMP, um, and I saw it pushed up from where I had stopped out, and I had a feeling this thing was going to push higher, and I went long here at 87.32. So right about there, guys. I don't know if you can see that. So I went long here, 87.32, 100 shares. I only won 100 shares because the last trade I knew I went too big a share size. Um, and I think my stop was a break below 87. So sorry for all this zooming in and out, guys. I'm trying to get the best picture for y'all. So I went here long, 87.32, and my stop was a break below 87, so right about here, which I'm kind of buying overextended, guys. The support is down here on this white dotted line. So really my stop loss should have been down here at 86.20. So that would have been a dollar. I would have been risking $100 on that. But so I set my stop loss tighter because I was in too big a share size, so I couldn't risk that much. So I set a tighter stop loss here, and luckily we did get a push up. And as soon as we broke over this $88 level and we got this pop up here to 88.30s, I sold out 50 shares. I sold half my position there, because I was risking 30 cents. I made $1 right there, so that was over a 2-to-1 risk reward. So I felt good about taking half off right there and locking in profits. And when I did that, I was more comfortable with letting the other 50 shares ride all the way up here. I took off another 25 at the break and pop over $91. A lot of times when we break these whole dollar levels, you get a 20 to 30 cent move higher. So that's why I'm selling 20 to 30 cents above these whole dollar, 88.31 and 91.25. And I'm selling, this candle ended up pushing higher, and so did the next few. But you can't win them all. And on this candle, guys, right here, I sold out at right below the $93 resistance level at 92.94. I made another trade here, 91.47, 100 shares sold out right here. And I gotta hurry up, guys. I sold half up here on this big push, and then I sold out the rest up here on this, on the tops here, guys. And so on those trades, I was up another $236, and I took another trade on Tesla, and I made $40 on that trade, which brought me to $609 profit on the day. All right, guys, thanks for tuning in. I wish I could go in more detail on the other two trades, but I'm running out of time, and I got to cut it short here.